The market still looks pretty good to us technically. I think the one thing that gets us, and I'm sure you've all talked about this, everyone complained only 7 stocks going up most of this year. And it really wasn't true. We disagreed with that. And now you have a day like yesterday where tech's down 2%, but then you peel back the onion, there were more 52-week highs on the NYSE yesterday than the day before. The number of stocks above their 50-day and 200-day moving average were higher yesterday than the day before. So what's that tell us? Well, there's a lot of stocks that are going up. It's not just about tech. Yes, this tech pullback, hey, where's tech? It's where it was 3 months ago. One last comment. If I'd been here a week ago, we've been talking about, what, 13 days in a row for technology higher. Now it had that pullback, bouncing a little today, which is nice. I think it's just a pretty healthy market still.
So how does it portend for 2026, the prediction?
Yeah, we're still pretty optimistic. We think next year S&P 500 gains between 12 and 15% total return basis, so keep things rolling.
He was right last year.
Yeah.
And he was right this year.
Yeah, we've been bullish, so we're still in that camp. You know, you think about if you don't have a recession, and we just don't see a recession coming. The S&P 500 is higher at least 10% on average 70% of the time. So bigger gains are normal. There's all these other things we can talk about, but one more, it's kind of fun. When the S&P 500 is down 15% for the year at any point, and then kind of yo-yos back up,
like
it did this year, and
in April.
Exactly, and finishes higher 10% for the year, which we're probably going to do this year. Only happened 3 times. That next year, called a slingshot effect, that next year's been higher every time, up like 20% on average. No, I'm not calling for 20%. But I'm saying this volatility and this upside we had, we don't think it's over.
I want to bring in Bill Maloney because we love listening to your reports. And there was something you had out also yesterday, and we talked about it a lot on air about the S&P 500 going below the 50-day moving average. Seemed like a pretty significant move. We're back up there today.
And we're back up a bit today. Micron had blowout numbers. That reminds you of the NVIDIA days. The numbers were just fantastic. Interesting, though, is that Micron has not taken out the highs of the year. So the stock's up $25, $26, ran right into that resistance today. So that's a number to watch, around 260, 265. As far as the tape is concerned, it has been broadening out. The RSP still looks great. The equal weight ETF still looks good. But still worries me is that 40% of the S&P is 7 stocks. So that leaves little room for error. You have one hiccup from one of them. That's what makes me nervous. But overall, the tape still looks good.
I'll jump in on that, and that's true. You know, we looked at the 10 largest stocks in the S&P 500, the SPY, make up like 41%, like we just said there. But we look at 25 developed markets. That's actually the 3rd smallest out of all of them. So the U.S. is not actually as top-heavy. And I get it. A lot of these countries in Europe have 1 or 2 big companies that make up a lot. So I hear that, but we heard that a year ago. Like a year ago, we were talking about that. So I'm not minimizing it, but it's there.
Maybe not as top-heavy, but still top-heavy.
But potentially, but just last week, I mean, a week ago today, the S&P 500, the New York Stock Exchange advanced decline line made a new all-time high. That usually says the clock is starting as breadth leads price. So I'm with you on that. That's why we're more neutral tech. I mean, we're more neutral tech here. I think industrials, financials, those cyclicals, probably healthcare. We're not as warm and fuzzy in healthcare, but I totally see what you're saying. But there are other areas I think that might probably do better next year.
So we're getting one view from Ryan. Bill, you speak to people every day. Your clients, Bloomberg's clients, traders that you worked with earlier in your career. What's the general message that you're hearing from them?
Cautious. They're getting cautious up in here. We've had 3 great years in a row. They're getting a little cautious. That number with the S&P number of stocks, the S&P has them nervous. But to me, Oracle's a busted stock. Costco doesn't look good. I mean, Walmart has a higher PE than NVIDIA right now. So there are some parts of the market that are looking very expensive. The biotechs are looking good. Defensive names have been acting well. Oil still doesn't look great. But caution is kind of what they're looking for next year.
I am blown away by what you just said. You said Walmart has a higher PE.
Has a higher forward PE.
Oh, forward PE, right.
So
right
for
now.
2026, Walmart's trading more expensive than NVIDIA.
Does that, Ryan, does that mean that NVIDIA's a bargain right now?
Oh, boy, put me in the hot seat
I
there.
know.
I mean, I think it would
and I
be
know
more,
you're a technician, but
yeah, I mean, what have we seen with these high-flying tech stocks? You want to buy things in bull markets on scary pullbacks, right? We saw that in gold just last month in November. It had this big move up. Everybody turned bullish and pulls back. So we're going to look back just like in March, April, and say, oh my goodness, all these tech stocks everybody loved right before this weakness, and nobody wants to touch them now. So there's probably some opportunity. But Bill, I want to ask you, what's your take on Developed International? We like Developed International.
They look awesome.
Yeah, I mean, because we're talking about valuations. It's like, well, if you're worried about tech valuation in the U.S., That's fine. Go look around the globe. There's not a lot of tech in Europe. There is financials, industrials, materials. Those groups still look good. And to me, we're slightly overweight developed international this year and like it next year.
And some of those countries, France, Japan, hitting all-time highs, Germany hitting an all-time high. So developed and emerging look great, and they're finally kind of, after a 10-year bear market, they're starting to turn the corner.
Yeah.
So what's the risk? What's the number one risk you think, Bill, for 2026?
Well, I'm looking at Oracle and I'm looking at Blue Owl.
So
Oracle-
private credit, and you're looking
Exactly,
at
private
Yeah.
credit.
default swaps.
Oracle's got to hold 179, 180 right here. If it can hold on to here, because that's another busted stock that was trading $350 not too long ago. So that has to hold. Blue Owl has to kind of stabilize and look good, but it's private credit and the data centers. You know,
Blue
that's-
Owl backing out. They've been a longtime partner of Oracle, but backing out on
Of the
one
Michigan data center.
Yes.
Right, exactly.
Yes.
Just for those not
But then we
familiar.
got news late that a couple of the they got approval from a couple of the energy companies, regulators, so that's going ahead. So
Okay.
it's going to go.
Ryan, same question to you. Risks, what concerns you? What scares you for next year?
The Fed's going to be dovish, right? We know that. I mean, that's going to be happening. What if they continue to cut and the economy really starts to get better? Reacceleration is a big theme
You
we
think
have.
no matter who's as Fed chair, they're going to be dovish?
Well, yes, I guess is the short answer. I mean, that's the short answer, right? Fed funds futures say there's going to be maybe 2 cuts. If you look at what the dot plot said a week ago, 1 cut. We think it's probably more like 3 or 4. Just like this year, that was kind of the scenario. So, could they turn into hyperdrive
But
like
if
late
there's 3 cuts,
2021?
isn't the economy coming undone then?
We don't think so. I mean, I think it is the labor market weakening. It's not.
Yeah.
When you look at what we just saw, we just had retail sales that are solid. I understand all the issues with the labor market, but it was kind of nice when we didn't have government data there for a while. We all followed earnings, and earnings actually were solid. And what companies had to say
Well-
about the economy were still pretty good.
We missed the data.
Bill, 10 seconds. What's the buzz you keep hearing about the
Well,
Fed next year?
Back
Real
to
quick.
the Fed, the 2-year yield is going straight down. And it's been going down for years. The 10-year's been going sideways. So until that cracks, we're not sure. But the 2-year yield is going down.